And the main point, we're no longer in an easy money environment.
Things will never remain the same after this moment, and Howard Marks has a lot to say on this. If you don't know him, he is a genius who made a great fortune during the time when companies were going bankrupt. It's because he developed a philosophy of investing and buying distressed debts of these companies, which paid him off later on. Eventually, in 1995, he co-founded an asset management firm named Oaktree Capital Management, which followed his investment philosophy. Initially, this firm managed assets worth only $7 billion, which have now grown to a staggering $180 billion. You can guess why that happened. This made Marks a distressed loan tycoon, famous for his unorthodox approach. Today, in the financial world, he is famous for writing memos that provide deep insights into what will happen next in the financial world. In his memos, he often uses the term sea change, something that fascinates and scares investors at the same time. You will know what it is within a few minutes. Whenever he says a sea change is coming, people have to take him seriously. And in his latest interview and memo, he revealed a third sea change is coming that will literally change everything for the world, especially the US. It's because this sea change will deprive the US of the very leverage that made it the biggest economy in the world. What did Howard Marks reveal, and what once-in-a-lifetime financial event is coming? Let's know the crux of his recent interview in this video. Chapter 1. The good old days. According to Howard Marks, households, banks, and businesses in the U.S. have reaped the benefits of historically low interest rates and easy access to loans until now. This advantage empowered them to make purchases and postpone payments, all thanks to the favorable interest rate and buy now, pay later strategy. This scenario was made possible by the U.S.'s ability to effortlessly print money, resulting in inflation that could be exported beyond its borders. Let's understand how. As the US dollar assumed the role of an international reserve currency, the surplus printed dollars found their way into the exchange for imported goods and services, maintaining a delicate balance. In other words, the US could import products from literally any country and pay in dollars, which were stored in those countries' central banks. But now, according to Howard Marks, there are signs that this system, where the U.S. leveraged its position as the predominant financial power, is on the verge of a profound transformation. It will be the third sea change, bringing drastic shifts for the U.S. Chapter 2. Distressed Debt and Sea Change Philosophy. In his interview, Marks talked about how the earlier financial system allowed him to make a fortune from distressed debts, loans or bonds that a company struggled to repay. You should know that when a company encounters financial difficulties, the value of its debts can decrease, making them more affordable to purchase. Marks and his firm, Oaktree Capital Management, had a knack for identifying these struggling companies burdened with inexpensive debts. They would acquire these debts at a reduced price because others were concerned that the companies might not be able to repay them fully. After acquiring these distressed debts, Marks adopted a patient approach. The struggling companies would manage to recover and fulfill their debt obligations because they were bankrolled. The U.S. had low interest rates and easier policies for bankrupting companies, which meant refinancing. In other words, companies' earlier loans were refinanced and they grew. Marks profited from all this because he purchased the debts at a discounted rate. But sometimes, if improvements did not materialize, Marks assumed control of the company or negotiated more favorable terms, always to generate profits. But this is not possible today because interest rates are high, and the ease with which loans could be secured is no more. You will know more about this within a few minutes. That's when you should know about the sea change, a philosophy he has developed. In simple terms, sea change is a profound yet dramatic shift within the investment and financial order that individuals should brace themselves for. In December 2022, he authored a memo titled Sea Change. And more recently, on October 11th of this year, he published another memo titled Further Thoughts on Sea Change. It is this latter memo that has created significant waves. Marks argues that the financial markets are in a sea change, indicating the end of accommodative central bank monetary policies. Simply put, the government will cease supporting failing banks and companies by offering loans at low interest rates. This unexpected and unconventional shift lies at the heart of the matter. Chapter 3. End of Easy Money. In his interview, Marks discusses some unsettling predictions that might be hard for most people to believe. For him, these are not predictions but carefully calculated possibilities that will manifest themselves. He said that previously, the U.S. experienced an era of incredibly low interest rates and abundant liquidity, making borrowing money easy and creating favorable financial conditions for businesses and investors to thrive. He calls this easy money. This era of easy money fueled the U.S. economy, enabling Americans to enrich their living standards without financial concerns. During this time, the dominant buy now, pay later policy allowed Americans to afford everything by relying on debt. Well, this is not a nostalgia of the past but the present, where most Americans use credit cards for daily expenditures. In the second quarter alone, U.S. credit card debt surpassed $1 trillion, marking an increase of $45 billion in just 3 months. However, Marx warns that this environment is approaching its end. The era of easy money has led to asset price inflation, creating a highly stressed period in the investment market. It's essential to understand this point because, as mentioned earlier, the U.S. exported this inflation. While it's true that the extra printed money was invested in various assets, increasing their demand and consequently their prices, this inflation couldn't be exported. Marx argues that this asset price inflation raises concerns about potential market bubbles. At the same time, the low interest rate environment has encouraged borrowing, resulting in high debt levels across various sectors. Recently, U.S. household debt surpassed $17 trillion. To fix this situation, Marx predicts a sea change, signifying higher interest rates, which we are seeing in the U.S. This shift will not only make future borrowing expensive, but will also increase rates on existing loans, leading to a time when companies will default on their debts. There will be no one to bankroll them. That will be the time when investing in distressed debts would mean a financial suicide. Chapter 4: Businesses and Real Estate Doomed. According to Howard Marks, even if households managed to refinance their loans during rising interest rates, businesses would bear the brunt of the impact. Since businesses borrow from millions to billions of dollars, even a slight increase in interest rates can have disastrous consequences, potentially leading to their bankruptcy. Earlier, they avoided bankruptcy or rose after going bankrupt by securing loans. This time, they won't. It's worth noting that Silicon Valley Bank and Signature Bank have already experienced a collapse, partially attributed to high interest rates. Interestingly, the rise of interest rates was also crucial in triggering the 2008 financial crisis. During the housing bubble, many homeowners and businesses capitalized on low interest rates to accumulate debts. However, as interest rates began to climb, numerous individuals and businesses faced challenges in refinancing their mortgages, resulting in foreclosures and widespread financial crises. This brought a market crash. With rising interest rates, Marx argues that more companies will default on their loans. This not only creates a substantial void in the economy due to their collapse, but also leads to the disappearance of non-performing loans, ushering in a level of turmoil unprecedented in our experience. Chapter 5: Government's Dilemma and Dollar's Fall. Marx reveals something formidable. The government will not escape the impact of the sea change too. He argues that the government faces the need to issue new debt despite lacking liquidity, resulting in an unavoidable increase in money printing. As the government continues lending despite significant economic gaps, a temporary halt in government welfare programs may follow. Furthermore, Marx argues that the government itself has to refinance its debts at elevated interest rates, leading to budget deficits. A historical precedent for this scenario is visible in the 1980s, when the United States grappled with surging interest rates. The government had to refinance its debt at higher rates, resulting in expanded budget deficits and increased government debt levels. That's not even the end of the turmoil. Marx argues that dollar devaluation poses an additional challenge for the government. With increased money printing, the dollar's value is anticipated to decline sharply. Consequently, this will escalate the U.S. national debt, prompting Congress to once again engage in a debate on the debt ceiling. Marx argues that uncertainty surrounds the government's long-term financial outlook. This uncertainty will make it more challenging for the government to navigate the situation, as investors may hesitate to invest in long-term treasury bonds. It sets the stage for a cycle where one misstep could trigger a chain of disasters. Put simply, the upcoming financial event will be a situation with no chain of saviors. Bankrupting companies will go bankrupt, After all, banks will offer no loans because the central banks have increased interest rates. This brings the governments into a crisis as their debts increase, with limited available revenue to finance them. Do you agree with Howard Marks that an inevitable financial change is coming that will change everything? Let us know your thoughts on this in the comments section right below.